You know, when we see our ACA premiums go up and something just feels a little off, like prices keep going up, but the coverage itself isn't getting any better. That's the frustration that I see with a lot of people lately. And it's not because we're suddenly using more care, it's because the structure itself has shifted. Before we go any further, let me say this clearly. It's not about panic, it's not about doing something wrong. For a lot of us, whether we're single or trying to protect a family, it's just the reality of the way that the ACA plans are priced right now, and there are ways to respond to it strategically. We choose a silver or gold plan thinking that if we pay more, we'll be well covered. What's really happening though is premiums are rising year after year, and we're not using those benefits enough to justify the cost. So, what's really happening here is we're paying more month after month without getting a proportional amount of value back. And the good news is there is a different strategy that can make a lot of sense for a lot of us. One option that's worth taking a look at is dropping from a silver or gold plan down to a bronze plan, specifically one that's high deductible, and most are right now. So bronze doesn't mean no coverage. They do still usually cover your day-to-day things like your checkups, your sick visits, your urgent care, things like that, with copays and discounts even before your deductible is met. Where they're different is the out-of-pocket limits are normally higher. So the question that we really need to be asking ourselves is this: am I really using the benefits that are making those higher tier plans so much more expensive? If we're generally healthy and not really seeing specialists on a regular basis, then having one of those higher tier plans and the benefits that go with them may not line up with the way that we're actually using our health insurance. Now, here's where it really starts to come together. Once we've made that move over to the bronze plan like this, it opens up the door to something that most of us either have never used before or that we don't really fully understand, and that's the HSA. An HSA is a health savings account. Now, at a high level, it's just a savings account that's used for healthcare costs. But the real difference is how the money is treated. Most of us are used to thinking about health insurance as money that disappears every month. We pay our premium month after month, and whether we use the plan or we don't use the plan, that money is gone. But with a bronze plan paired with an HSA, it works very, very differently. Instead of sending money away and hoping that we get value back, we're intentionally setting it aside, and so we're keeping control of it. And once that clicks, the mechanics of this all make sense. When we put money into the HSA, it's still our money, it stays in our control, it doesn't expire at the end of the year, and whether we save it or use it depends solely on our needs. Also, the money that we put into the HSA lowers our taxable income. Then when healthcare expenses come up, we can use that HSA money, and if it's done correctly, that money comes out 100% tax-free. So we're taking dollars that would have been spent, taxed, and gone, and turning them into dollars that are tax-free going in, tax-free going out, and still ours the whole time. And that's the shift that most people miss. Now, that HSA money can be used for things that we already pay out of pocket, sick visits, prescriptions, lab work, urgent care, but it can also be used for over-the-counter things like pain relievers or cold medication. It can be used for things like Band-Aids or first aid supplies and even allergy medications. Instead of paying for those things with after-tax money from a checking account, we're using pre-tax money from money we intentionally set aside. And that's why a bronze plan and an HSA pair so well. We lower premiums on the front end, we keep protection against the major medical events, and we redirect some of the monthly savings into an account that we still own. So if we don't use it all, it's still there. If we need it, it's available. Either way, it's not wasted. It's a very different experience than paying higher premiums month after month and just hoping the value shows up. And here's where this can quietly help even more for some people. Some of us are in a position where we're not far off from qualifying, but making just a little bit too much to qualify for the subsidies. Now, put money into an HSA, it lowers our taxable income, and so for some households, it takes them from being just over the line to just under that. That's not something that everyone will see, but for those that it does apply, this can mean a meaningful decrease in their monthly premiums. So when we zoom out, this can really stack up. Lower monthly premiums, money we control, tax savings, and for those that are close, help with their monthly premiums as well. If you want to see how this works for your income and your family, I'd be more than happy to walk through that with you. We can see if it makes sense for us to work together. And if you want to schedule a call, you can click on the link in the comment or the description. You can also leave a comment and I can answer any questions there that way as well. There's no cost for either one of those. Already paying for health insurance anyway. It's probably still worth understanding how it's structured. And especially when it comes to saving money, a little clarity goes a long way.